The issue of credit ratings has become increasingly important across Africa, partly because the amount of African countries that are debt stressed at the moment has doubled since 2020. And you look at the nature of the debt structure, unlike 2010, when we had just about 1/3 of the portfolio being commercial, now it's almost half. So African countries need to pay a lot more attention to the cost of borrowing. And to address that cost of borrowing issue, the benchmark used to price risk across the world and in Africa as well are the credit ratings. And most African countries are not as prepared as they should be for that process. And that's on the one side. On the other side, we have the methodologies and the data required to arrive at the credit ratings. A number of analysts have looked at it and concluded that there is a lot of subjectivity when it comes to Africa, partly because of the lack of data and partly because it's not a very familiar market to investors. And that affects the credit ratings of African countries and the cost of borrowing.
And Raymond, you raise a very pertinent issue, and I just want to look at some interesting numbers. The UNDP released a report last year indicating that around $75 billion were going towards the cost for running credit rating agencies. And in equal measure, this same amount could be rechanneled to other pressing needs such as infrastructure and such like. What would be the opportunity cost if African countries are able to develop their own agencies?
Thank you. I think there are two sides to this issue. Yes, you are right. When you look at the subjective, which the report focuses on, that some of the subjective credit ratings and more objective ways to measure risk in Africa, there is a delta of about $74 billion, and that's only for about 19 African countries. The issue is not so much developing an African credit ratings agency. The issue is getting the credit ratings right for African countries. And because the market would look at the ratings and say, does this really reflect risk in these countries? And I think that this is where we have to pay a bit more attention. And the reason why this is an important and urgent issue right now is that for African countries to get to the next level when it comes to economic development and financial stability, between now and 2030, for example, for African countries to attain the Sustainable Development Goals, there is an investment gap of about $200 billion a year. That's not going to come from traditional sources. It's not going to come from your normal bilateral or multilateral sources. Is going to come from understanding how to use the markets to finance Africa's next step. And this is the challenge that we have, because if countries are paying so much more in interest on their debts, then there is a lot less to invest in development.
And Raymond, you couldn't have said it any way better. And as we near the tail end of this conversation, talk to me about some of the initiatives you're working with, especially key institutions as well as partners that are keen on this whole getting it right for African countries, especially having the right models for their credit rating agencies.
Yes, UNDP's Africa Bureau is partnering with AfriCatalyst, which is the Dakar-based management firm, to launch something we're calling the Africa Credit Ratings Initiative. This is not a duplication of what others are doing. It is more complementary. And our focus is to ensure that the capacity in African countries, not just to analyze risk, but to ensure that the process is more development friendly, is front and center. We plan to do three things. The first is we're putting together what we call a consilium of advisors, and people who could walk along African countries and answer their questions, be the guides in this very new process for most African countries. The second thing that we are trying to do is we have put together an online portal that has all the information that people on the African continent, officials, practitioners working in this space would need. The data, the analysis, breaking down the process, highlighting the roles and responsibilities of African countries. Also, workshopping and simulators that help African countries understand the implications of policy and decisions in this area. And then the third thing we want to do is have a community of practice where African professionals in this area could cross-pollinate ideas and help not just their countries, but the continent as a whole address this emerging and thorny issue.